Radix is one of the most volatile cryptos in the space, and that makes it a nice candidate to trade. You don't just want to hold XRD, you want to ride those waves. Now, how can we properly time this? How can we know if XRD goes down by 62%, or it rises by 90%, or it goes down again by another 40%, just in order to then rally again, this time by almost 300%? What's a good way to time those waves? A straightforward way is to use moving averages, right? For example, here, the 50-day, we go long whenever the price is above, and we go short, or we bet on falling prices whenever the price is below. So we are riding those waves. But then the question is, why take the 50-day? Why not take the 100 or the 150 or the 200? Right? It sounds quite arbitrary what duration here to take. And besides the duration, does this even work? Would it work to trade according to the moving average, especially when we consider trading fees as well? When we assume, for example, that 0.2% is always been taken away from us in form of trading fees. Now here's where statistics, where numbers are very helpful. We can back test this. We can find out, historically at least, what would have been the best moving average for Radix, and how did it work comparatively to just buying and holding? Did this approach in general outperform? The very nice thing about this is that this approach works for almost every cryptocurrency. What we have here on the left is a summary of the best simple moving average for Radix. So our data starts in August of 2021, when the price was at 11 cents, and it goes all the way to October, where we're now at 4.4 cents. And we run that backtest to look at the best simple moving average. Buying and holding compounded would have given us minus 47%, but there are a few moving average durations that outperformed this quite nicely. And a different way to display this table here, with the duration of the moving average and the trading performance, is this chart. By the way, we are including fees here, 0.2% trading fees with every trade. We go both long whenever the price is above, but we also bet on falling prices whenever we are below. Now look at this chart. Buying and holding would have given us minus 47%. This is this black line over here as a reference. Now the line here in turquoise shows us the annualized performance if we traded according to the moving average. And pretty much every moving average above 40 days would have outperformed buying and holding. And it's impressive that some of those moving averages even gave us positive return, given that the asset itself went down that massively, right? From 11 cents to 4.4. So the very best moving average seems to be over here, the 196 day. There's also a pretty good one over here, 46 day, and we could take either over here. Let's take the shorter duration, 91. And let's plot all of those three moving averages on the current price chart. Here's the chart, and again, if the price is above, we should be long. When the price is below, we should be short. And we've got now multiple signals, right? And all of those approaches work similarly well to a degree. They all outperform buying and holding. With this current trend, we should be bearish, at least until we hit 5.5 cents roughly. So that's a rally from here of 25%. Ideally, we even go higher, say to 6.4 cents. But there are our fake outs, right? Sometimes we go really high in the price just in order to come back down again. But even with those fake outs, right? Historically, following those moving averages worked very well. And the approach in general tends to work better than buying and holding. Now this is then how this looks on a chart. So let's say for the 195 over here, right? The 195 day simple moving average, the best one. We've got the price of Radix here in white, and we've got the back-tested performance here in turquoise. Let's look at a shorter duration, say 45 days. That's the chart in comparison. A bit less volatility, which kind of makes sense because you're reacting to the market a bit quicker. It's not surprising that we see an underperformance of XRD and that we see the price going in trends. That's very, very typical. Most altcoins don't do as well as Bitcoin over the very long term, and most altcoins move in those cycles. Sometimes there's a lot of hype around an altcoin, everybody jumps in, and so the price continues rising, and then at some point capital moves again to the next trend in town, and the altcoin tends to bleed and lose against Bitcoin. There's all kinds of different approaches to ride those waves. I prefer quantifiable approaches, approaches that worked in the past and approaches that are optimized to a degree to a specific altcoin. That's why I do those simulations of buying and selling. And I don't just do them for Radix, I do them for many altcoins. Let me know what altcoin to check out next. Join our Telegram. I hang around there regularly. Link is down below.